I want to bring in back to the markets Russell Investment Group Chief Market Strategist Stephen Wood and former Dallas Fed Chief Economist and Senior VP Michael Cox. Michael, to you first. She said some key things, among them that any rate change, any kind of movement is, quote, tiny. I immediately thought of that Elton John song, Tiny Dancer, because she's almost dancing on a pin here. What did you make of that comment as it pertains to how many more rate hikes we see in the coming months?
Exactly. Today's rate hike is tiny, but projections of future rate hikes add up to getting us back into the 2% to 2.5% range. To me, this is the perfect time to raise rates. The Fed has the cover of an increasingly strong economy, though not strong by historical means, and they've got an incoming president who would be, much more hawkish than previous presidents, and so we also have probably a pending cut in the corporate income tax rate, and that is going to keep the market up for a long time while the Fed raises rates. And you have it's a great balance, great time to increase interest rates in the face of falling tax rates.
Let me bring in Stephen Wood here as we watch. You're starting to hear some shouts as we get closer to the closing bell. Dow 20,000 appears not to be in the cards, at least for this session. We are down 131 points. Stephen, look, Goldman Sachs said it's a Trump rally nonetheless. Today, notwithstanding, the Trump bump has really helped these markets get close to lifetime highs that we've never seen before. What does this do for the investor who's watching right now? Do they get in? Is this an entry point where we see the Dow pulling back by less than 1% at the moment?
Yeah, I would say that the economic environment is pretty consistent. Dr. Yellen looked at about 2%. We're a little bit higher than that. The inflationary picture is improving, so our call from a macro perspective in the U.S. is that's an okay environment. But this rally is also providing an opportunity for a U.S.-based investor to look globally. So the environment looks okay. The Fed is probably going to be on pace to raise, we think, twice next year. So they're not going to over-tighten, but valuations are becoming more and more of a concern. So selling into some of these rallies, not confining oneself to a U.S.-only perspective.
Okay, let me just explain when we say things that some of our viewers who might be new investors don't understand, and that is valuations might be getting a bit rich. Folks, what does that mean? It means that the price of stocks is a little too high for what each individual company might make in earnings for the current quarter. We're at about 17%, right? 17.7 times.
Exactly.
Right. So I just wanted to explain that.
So when you look at the price of stocks, thank you. So the price of stocks relative to earnings is looking kind of expensive. So when things are expensive, that's important. So taking a global view, looking in Europe where stocks are less expensive, where the Federal Reserve over there, the European Central Bank, is not going to be raising rates. So there are global opportunities that investors need to take into consideration. So we think valuations, the price of stock market, is one of the more important factors that we see happening right now.
Okay, well, what is cheap? Quickly, because I want to get back to Michael for a second on why everything appears to be down right now. But quickly tell me what you think is cheap at the moment for our viewer investors.
So right now we're looking more cyclically exposed stocks that participate when an economy does better, because we do think growth will be a little bit better. We're looking at financials. We're looking at some areas in cyclicals, some small areas in energy, for example, that are going to benefit from some of the smaller changes that are likely to come from the new administration. Okay. But that said, we're more global in our focus.
Yeah, even financials are down right now. Everything's reverted. I have to tell you, Michael, I'm looking at gold down. Crude is down $2.10 in the aftermarket session. Dow, NASDAQ, S&P. So let me finish out by saying, what do you look at for the Federal Reserve of 2017? What must they do to keep everything on an even keel?
Get rid of a lot of these financial market regulations. Participate in that with the Trump administration. That's been a great slowdown to markets. But look, you say that the market is down now. That's simply because interest rates are up and people expect them to rise. But look where the market is right now compared to the month ago, just the day before the election. The market is way up from that time, even factoring in this rate increase and all the expected ones which we're now seeing. So this is good.
I like to hear that. This is good. We'll end on a positive note, even though the markets are not positive but negative. Michael Cox, former Dallas Fed Senior VP and Chief Economist, and Stephen Wood, Russell Investment Group Chief Market Strategist.